Hello guys, Wolfie back with another video. I was taking a look at the Ethereum markets and some of the general market sentiment, not just Ethereum, obviously oil, gold, the US dollar, everything like that, sort of looking at how the market's reacting and behaving. And I'm just thinking that we've been accumulating around this level for around about 60 days now. And as you guys know, we had this crash. Obviously, we had a crash back here, and we returned back down to these amazing order zones. We did say that when we come down to these order zones off the crash, you don't just turn around and moon. This boost, this bump right up here, I was calling shorts from up here, and calling shorts again from up here, because the whales, when they return back down to their order zones, do not let it run away that quickly. They take time to accumulate slowly their orders, so they're ready for the next bull market. And I think that we've had, like I said, it's around about 60 days we've been here accumulating. It really does feel like almost enough time before we turn around. It was only around about 60 days here before that crash that we turned around. And this crash, as you can see, is far more intense, which means there's a lot more fear in the market. This crash was not as intense. It was a lot more stair-steppy. You know, people had time to get out. We had more FUD this time. Here it was like China banning crypto and shit like that. Here it's like World War III. So obviously people are very concerned and scared. But when I'm starting to look at market sentiment and adoption narratives and stuff like that, sort of Bitcoin adoption narrative with Russian oligarchs getting banned and being forced to buy cryptocurrency, it sort of makes me more bullish on crypto and everything like that. So I just thought I'd take this time to go over the general market, to go over Chairman Powell, what he's been speaking about with interest rates, etc., and give you guys an idea of the general market, basically. So I went on to Forex Factory. If you guys don't use this website, you really should. It's a economic calendar website. They do a lot more. They do news and everything like that. But forexfactory.com, click on calendar, and it maps out all of the economic events that are happening. So obviously on Wednesday, we had Chairman Powell speaking with the FOMC economic projections. What this means is he basically sits at a desk and explains what the government is going to do to try and help the economy. Whether they're going to be dovish or hawkish, meaning are they going to be harsh with their they're going to do a lot to try and change the economy, they're going to actually take action, or are they going to hold off and not take action? We expected a 0.25% interest rate hike. We got a 0.25% interest rate hike. I'll explain why that's important in a second. But essentially, he sits down and he uses a load of big words to confuse everyone that doesn't understand what he's talking about. If you break it down, it's very, very simple, and I'll break it down for you guys right now. Essentially, the aggregate demand in America right now, and the whole world economy, but mainly America, is very high. So obviously, as aggregate demand increases, as you can see, the price of goods increases. Because obviously, as demand increases, the price increases, therefore we have inflation. So if everyone's buying a load of products, the price of products goes up, and that's obviously inflation. CPI index, what we use to measure inflation. So in order to battle inflation, what do? You want to pull the demand back. So as you can see, aggregate demand increases, which increases the price of goods. You want to pull the demand back. How do we pull the demand back? Interest rate hikes. If you increase the interest rates, it pulls demand back downwards. Why does that happen? Aggregate demand is when people are borrowing money, they're not saving money, they're borrowing money, they're putting money into the economy, they're making big purchases, etc. The way that you get the economy to stop making those big purchases and start saving their money instead of borrowing it is you increase interest rates. If interest rates increase, the cost of borrowing increases, so people are less incentivized to borrow, and the reward for saving also increases. So it's sort of like a way of double-edged sword in that they decrease the amount of borrowing, so people are borrowing less, their interest rates on their credit cards increase, etc., 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 and they're saving more because there's more of an incentive for them to save their money. As we obviously get into the future of finance, even with 0.25% interest rate hikes, you're still getting 1/10 of a penny on the dollar if you're lucky with the banks. Things like Bitcoin and other currencies like that will always give you a far better return. But that's the general market sentiment, is that the American government is finally actually taking action to battle inflation, because they know that inflation is too high and they want to reduce inflation. Obviously, inflation being high is bad for the world economy, but very good for us. If inflation is high, people start to put their money in Bitcoin and cryptocurrency, as they are not affected by inflation and they are a hedge against inflation, which is obviously amazing. So you can see the general world economy when we had this sort of Russia World War III FUD. Safe haven assets such as gold and also oil, because of the fear of we can't buy oil from Russia, etc., also went absolutely crazy. You can see that after they've gone absolutely crazy, we always talk about inefficient pricing. Any sort of rocket ship move upwards, especially in big equity markets where you're trading trillions of dollars, it's not sustainable, and it will come back down and crash down the other way. So gold, oil, DXY has actually held up a little bit more strong. But gold and oil had these massive moves upwards and these crashes down. You can see the chart work is almost exactly identical for oil and gold. So buys on gold I actually took from back down at these levels down here. Beautiful buy down here. I believe it had some sort of fixed range confluence if I'm not mistaken. Yeah, beautiful. So you can see fixed range tool, obviously my favorite tool in the whole market. You can see how the market just touches that perfect high volume fixed range just before mooning off. And obviously if you're taking a buy on these fixed range tools just before a moon, you're getting like a tiny stop loss of maybe risking 1,000 pipettes for 27,000 reward, which is absolutely fucking bonkers. But that's the general markets, and the reason this is so important, and I want you guys to understand what's going on here, is gold and oil are safe haven assets, which means that when there's fear and uncertainty in the market, they go fucking crazy. And they've sort of corrected back down into safer but entry zones, and we now have this sort of issue where it's like, what are Russia going to do? We need to know what Russia and Ukraine are going to do. If Russia and Ukraine continues to get worse, if Russia continues to invade, they push harder and World War III looks more likely, then obviously buying gold at these levels is going to be amazing because it's going to continue going upwards. If this was just a short-term bit of FUD, Russia invading Ukraine, obviously it's a massive event. I'm sorry for putting it down as a little bit of FUD, but I have to think as an economist here. If Russia are going to start backing off from Ukraine, if it's going to start to fizzle out, if the World War III narrative is going to start to fizzle out, then we'll start to see things return back to normal. And that's what we hope for. But as long as Russia is sort of pressuring Ukraine, we have this suppressed price action, which can be highlighted by this trend line here. We have this sort of suppressed downwards trend line where we're waiting for some sort of confirmation, positive news event or something of the sort to push Ethereum up to the upside. What I personally want to see is what I like to call a shakeout. Every time before a moon, before Ethereum moons or Bitcoin moons or anything like that, the market shakes itself out. So you have this beautiful low here, gets taken out before we go upwards. You have these two beautiful lows here. This low gets taken out just for, actually I think it gets just about respected. Just about gets respected, to be fair. But this beautiful price action here is just, it just looks too neat. Whenever there's really neat price action, so beautiful lows being respected, the market likes to come down and shake it out. So here gets shaken out, here to here gets shaken out. If we return back down here onto a lower time frame, it might be a little bit clearer for you guys. Go here and we'll go on to the 30-minute. Make the chart a little bit clearer. Do that slide, perfect. So as you can see, yeah, there we go, that's what I was talking about. So you have this beautiful set of double lows here. Really nice liquidity below this. This is what we would call a double bottom. Some people would call this a double bottom. If it was to spike the liquidity, if it was to break this low here, it wouldn't be a double bottom. The way a double bottom is verified is you have the first bottom and the second bottom. And the low of the first bottom should not be spiked. It should be respected. And that's how you know it's a double bottom. So then this was a beautiful liquidity down here. Lots of people in buys. The market does not like people to be in strong leverage buys before it goes on a moon mission because too many people make money and it's just not healthy for the market. So the market comes down and it breaks this beautiful 1-2 action by just about spiking this liquidity tiny bit. As you can see, it just spikes it to shake it out. So if we go back to where we are at the moment in price action, we have these. I'll just make the chart a little bit clearer again. Get rid of all these fucking ugly trend lines because I don't actually like them too much. Keep the ones that are genuinely beneficial, such as this one, which is the long-term trend line, and this one, which is the current trend line. If you look at current price action, we have this beautiful low, this beautiful low, and this beautiful low. So we have three beautiful lows, which is just far, in my opinion, far too clean. The market does not go on a moon mission with price action this clean. Lows are being respected, far too easily. We have not seen any liquidity get taken out. This is why I've highlighted this green box, because this right here is the in my opinion, the biggest amount of liquidity. Obviously, the largest liquidity is here, but this could genuinely be the bottom of the market. This is right after the crash. We had one last little spike down and then a move up. And I do believe that in order for us to go upwards, to release liquidity, the way the market works, if you want to buy $1 billion worth of Ethereum, you need $1 billion of Ethereum being sold. Otherwise, you're going to buy $1 billion here, you'll get 100 million in here, 100 million in here, 100 million in here, 100 million in here, and you sort of get slipped up to high prices. If you buy it when you break this low, then when you break this low, there's a lot of people in buy orders. What happens when you hit a stop loss of a buy order? It gets turned into a sell order. So what the market would like to do is come down here, hunt this low and release liquidity. So when it comes back down here, it breaks this low and it releases a huge amount of blood into the water. It releases a huge amount of sell orders into the water. So that's a huge amount of sell orders. As soon as we break this low, it's going to be all sells. I should actually change this to a red to make it a little bit more clear. So as soon as we break this low, huge amount of sell orders released into the market. And the person, or the composite man, or the whale, or whatever you want to call them, the person that drives price down to break this low, he's doing it on purpose because he wants these sell orders to be released so he can buy it up. Personally, I'd like to see one last little bit of FUD before we go on a moon mission. As I said, the market likes to kind of shake us out and get us all scared and confused before it goes on a moon mission. This price action for me is just far too clean, far too easily respected. It's just so much liquidity is resting below these lows, and we know that these whales love to eat up liquidity. They've been accumulating for a long time. They already have massive buys. They often like to do one last massive buy just to change direction, just for a final little shakeout, massive buy, and then we go on a moon mission. But when it comes to Ethereum and the general markets, I think we're very, very, very close to returning back to where we all want to be, sort of 5k region, 6k region, approaching the all-time highs. And you'll see because of this accumulation, it's been a very, very long accumulation. And the structure has been respected really well. We've seen massive buying strength and then obviously huge price suppression back down. I do believe that when we do flip bullish, it's going to be a very, very fast moon mission. I mean, all of this price action here, as we said, if we go back to this chart here, inefficient pricing, rocket ship upwards. It's the same thing on the downside. Inefficient pricing, rocket ship downwards. The market comes in and it fills in this price when it does decide to fill it in very, very fast. Because this is all selling, it's all like a void in price. It's very easy for the market to push through this with almost no resistance. Where does the resistance happen? It happens at the consolidation points. So you'll meet resistance here, you'll meet resistance here, you'll meet resistance here, you'll meet resistance here. You will not meet resistance in these voids. And as you can see, there's a very, very, very large amount, very, very, very large voids in price. So sort of here to here, sort of 8% void in price. So that means we can see an 8% move like that very fast. So I'm very excited for Ethereum and what's going to happen in the coming days. Obviously, historically, or coming weeks, I should say, historically, April, May, very, very bullish months for Bitcoin and Ethereum in general. You can see April is when we first started this sort of bull market. Sort of end of April is when we had this rocket ship in 2021. And I expect the same thing to happen. Obviously, history repeats itself. The market likes to go bullish around April time, so I do believe that sort of towards the end of April, we are going to be approaching new all-time highs. I know it's been a long few months. You guys have stuck through it, which I really, really respect. A bear market is hard. What is this? What is this decrease in? 50%. So all of my salary in the space, all of your portfolios in the space, just at base level at Ethereum have gone down by 50%. Obviously, some of the other coins, the altcoins, would have gone down by 80, 90%. Very, very concerning. But it's nice for you to know, and I can finally say, I know I've been a fucking massive bear, I've been the biggest fudder for a long time, but I can finally say that we are genuinely starting to turn around. Not just because of the price action on Ethereum, but general market sentiment is telling us that we've come back down off this massive. So this is a great indicator of how scared people are in the markets at the moment. So this is risk off because they're going back into the safer assets, they're going back into gold and oil, and now we're getting risk on, which means we're going back into the normal assets. So you can see the I think the Hong Kong index has gone absolutely bloody crazy. Hong Kong index, stock index, trading view. HSI index charts and quotes. So let's have a look at this Hang Seng. So we'll go on to the daily. And as you can see, the last 2 days in the Hong Kong index has gone absolutely nuts. I believe that's around about a 9%, 17%. I think it's 9% in one day. Yeah, it's around about 9% in one day, and then another 9% on the other day. The stock markets and the general equity markets are starting to push a little bit higher. We're starting to see people take their money out of gold and oil and put it back into the general markets. I believe that's because we feel that the whole World War III narrative was very scary, but it's starting to die off a little bit. As I said, what I do expect to happen is one more little bit of FUD to push us down to these levels, and then we can start to turn around. The biggest thing to understand is that the US government is starting to take measures to reduce inflation. This is what Chairman Powell has been talking about. This is what the 0.25% interest rate hike is about. This is what we expected as well. So the US government has finally sort of admitted that inflation is there, and it's going to do what it can to stop inflation. And he did also say in this meeting that he expected inflation to be high all through the summer. So he's basically saying that inflation is high, we're going to do what we can to stop it, but we're expecting it to continue to be high. And as you guys know, I've said 1,000 times, even just in this video, if inflation is high, Bitcoin goes high as well, and Ethereum goes high as well, because these are hedges against inflation. When the prices of products are going up, the real value of your money goes down. If inflation goes up by 10%, everything you buy is 10% more expensive. If your wage doesn't increase by 10%, the value of your money just drops by 10% instantly. With CPI at 20%, which I believe it is actually 20% at the moment, the value of your money, just from being in the bank, is decreased by 20%, which is obviously horrible. And that's why people look to get into Bitcoin. They look to get into Ethereum, so they can have sort of safer bets and safer they can hedge against inflation in that way. So that's sort of my Ethereum analysis and where I see things happening. Again, just mooning from here, it's possible. So, we have some beautiful accumulation here. If I pull out the fixed range, sort of down here, so we could just come down, mitigate this fixed range one last time and push upwards. Take out fixed range of the whole zone. You'll see that it is actually around about this medium, the highest point of volume. But just for me, I know there's loads of liquidity here, and I know how whales behave. I've traded Forex for a very, very, very long time. I know how liquidity is hunted. There is so much liquidity. Look at this volume. There's so much liquidity down below this line. And I know that these whales want to buy as much fucking Bitcoin and Ethereum as they can. And if they can just release one last bit of FUD, like, I don't know, US government is doing this to crypto, or crypto is going to die in the future, etc, 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 whatever, Elon Musk tweets something crazy, just anything that is negative for the crypto market is positive in my opinion, because it allows us to push down to this red box, which is the blood box, and it gives us one last chance to buy the blood. These whales, before a moon happens, will always push price down and give us one last chance to buy the blood, and that is what this box here represents. Taking out this low here is a little bit more concerning. It's not impossible, but as we said, to push below here, we're sort of returning back down to the lows of the June, July sort of crash, which means if we do actually return down to these lows, like we said about whales, they will not let price rocket away from there. They'll keep price there a little bit, which means we're going to be consolidating for a little bit longer. In my brain, the most perfect scenario for me as a trader is a little bit more FUD, push down to this red box, and then we can move away. So sort of towards the end of April and coming into May, we can really start to see some very, very, very bullish price action in the crypto markets. I'll go over some of my favorite picks for the crypto markets in another video. Obviously, I know a lot of you guys, like we said, are going into meme coins, ApeCoin as well. Horrible launch, but with the Bored Ape Yacht Club community, it's very unlikely that they will sell and dump it off. Some of the coins that we love as picks for this next bull market will be, obviously, we do like our meme coins. I know you guys are like, meme coins? Why the fuck will I buy meme coins? There isn't much utility there. One, the meme coins actually do have utility. Marshall Rogan Inu is a marketing tool in of itself. The treasury funds are taken to support fighters in the UFC. UFC fighters do not get paid a lot of money. So then because they're getting paid by this token, they then go on to public events, press conferences, etc. Jorge Masvidal, I don't actually know the fighters, but you can imagine some of these fighters, they go into the events and they say, "Thank you so much, Marshall Rogan Inu. You've given me money. You've supported me. Shout out Marshall Rogan Inu." And as we know with meme coins, all it takes is a celebrity to shout out, and it can go fucking crazy. Some of my picks for meme coin season. You can talk to Elise Day and some of our professionals in the chat about this. But MRI, blue chip, confirmed. It's in the Dex Tools trending 24/7. Watch it not be in here for once. Oh, for fuck's sake. Okay, well, it's not in there today, but it's very unlikely for MRI to not be in this trending page, because it is an established blue chip in the meme coin space. I think 500 million, $1 billion market cap is almost programmed for this token, sort of 10-20x gains. We also have coins such as Stilton, recently launched into space. We have massive Stilton advocates in our chat, and if for some reason it isn't letting me click the token. Stilton Musk. If you're wondering why is Stilton Musk going to go crazy, well, it's simple. It's Elon's favourite. More than just Elon's favourite, if you have a look at their roadmap and everything they're doing and their white paper, they are genuinely releasing a lot of utility. They sort of have a casino coming and some other stuff coming, which is very, very interesting. The narrative is good. They have a very, very good Stilton Musk, obviously Elon's favourite cheese. If Elon was to tweet about this, it would go crazy. But aside from that, they have a very strong community, and I don't believe they're going anywhere. $10 million market cap. If this was to hit $500 million market cap, it's a 50x, which is fucking insane returns. So Stilton is another great pick. Kuma, I believe it's called Kuma. If it loads. Kuma Inu. Elise Day is a massive fan of this token. They have some great utility. They also have a team of Floki devs. Floki obviously got into the top 10 coins or top 20 coins, so they've proven they're a professional team of devs. Very, very low market cap for what it is. And as you can see, it's almost dead at the moment. It's already gone crazy before, but it's literally almost dead at the moment. So buying Kuma at these levels, again, I do believe will be a great buy. As I said, if you are someone with low liquidity and you're scared about deploying at ETC, these coins are the highest risk reward, just because they're meme coins and they fucking go from $10 million to $500 million like that in a matter of days because everyone gets behind them, and that's why we love them. If you do wait for ETH to have this FUD, sort of break this low, release this liquidity, break this low and release this liquidity, I expect we will see some sort of further retracement on these meme coins when this happens. But I wouldn't. It's worrying to wait all of that time for this to happen. If you have enough capital, deploy some of it now. Don't deploy all of your capital at the moment. As we said, we need to wait a little bit longer and see how the market's playing out. We do not have any bullish confirmations yet. We have broken this trend line, but we formed another one, and we're respecting it very well. The market is showing that it wants to go, and we know sort of end of April, early May is historically when it will go. But we're in no rush to deploy capital, so let's take our time and see how the market behaves. But these sort of entry points for Kuma, especially entry points for Kuma, I think are extremely low. I mean, just the all-time high, you're looking at an 850% gain, which is fucking insane. That's an 85x, which is just brain dead, or 8.5x, which is just brain dead. Right, so you're almost getting a 10x to all-time highs, which is amazing. So those would be probably my favourite picks. Again, MRI, Stilton, and Kuma. There are a couple other ones, such as HWI, shilled by our resident maniac, or ex-resident maniac, Mr. Market on Trend, who is currently trying to find someone to be his exit liquidity on his disto 8 because he has no money, because he fucking can't trade. But HWI, around about $3.3 million market cap, has a very, very strong team. And they basically, their whole goal is to just get celebrities into Twitter spaces. They had CeeLo Green in there the other day, and that's how they market themselves. This is a far higher risk play than the other meme coins, but a much lower market cap of 3.73 million. Obviously, if you're then going to a $90 million market cap, $100 million market cap, you're already seeing 30x gains. And to go to $1 billion, you're looking at a 300x gain, which is why I like this as a play. Obviously, when Ethereum does start to flip bullish as well, this live pair explorer, as you can see, quite dead at the moment, 91%, 150%, 274%. When Ethereum flips bullish and starts taking out these voids and starts really going upwards, this live pair explorer will be filled with 500%, 1000%, 1500%. For those that enjoy these sort of degen plays, just wait. Just wait. I mean, we can degen on coins now, and yes, maybe you make a return, but if you are patient enough to wait until ETH goes bullish, you'll reap the rewards. Because when it comes to the degen casino and degening on coins that launch today, there's a much higher amount of coins that actually don't rug, because the dev is incentivized not to rug the token. Because when Ethereum is going bullish, these coins go fucking crazy. So the dev is incentivized. He makes more money by actually launching a real token than rugging a token. Sort of how it works. But those are some of my favourite picks. Again, Avalanche Network, I might need to do a whole video on, because I fucking love the Avalanche Network, and for DeFi they are so undervalued. Luvicha Finance 2.0 integrating NFTs into nodes, again an amazing project, might need its own video. But I believe that's everything I wanted to talk about. Is there anything else I want to talk about? Look on stock index, some economic stuff here. I was researching calendar, and I think that is everything. Maybe we can have one last look at Bitcoin and see how it's reacting. Cool, got type apparently. Yep, again, still in this wedge, still kind of following the same pattern as Ethereum. I'll map out the same zone down here. I had these zones mapped out as my maximum FUD points, so I would love to see price come down to these levels. It would just be fucking beautiful. But it's not looking as likely. But as I said, this is why I'm worried about people deploying capital at the moment. This is not a buy signal, this pattern here. If this is your chart, Moon or McDonald's, it's not the best buy. You want to wait for confirmations in the market, and we do not have confirmations yet. But I will say I'm starting to become less bearish. I do believe that maybe in a month or a few weeks we can start to see true bullish action in Bitcoin and Ethereum. Not a false bullish breakout, but a true bullish movement. But until then, we'll sit on our hands and we'll wait, and maybe stack up some bags or some coins that you like. As I said, sort of MRI, Stilton, Kuma, all incredible coins with incredible teams that will do well in the long run. But yeah, hope you guys enjoyed. Bit of a longer video, and for some of you I'm sure it was very, very boring, but it is nice for some of you obviously to get this outlook on the Ethereum markets and understand where we're going. I might do some shorter term analysis on Ethereum, because you guys seem to like that stuff. So I can tell you right now, this consolidation here, pull out a fixed range, boop, and we go like this. And that is how you become the best trader in the world. So if you're looking for short-term trades on Ethereum, a little false breakout of this trend line, touching this 50% of the consolidation and the fixed range, I'd like to see that. So we come up, test it, reject away, test it again, you take a sell, and it will come downwards. So that's sort of a little bit of short-term analysis on Ethereum as we're pushing up on a very inefficient and rocket ship style upwards movement. That's what I'd like to see on the short term. But yeah, hope you guys enjoyed this video on Ethereum analysis and where I see the market going in the future. Again, Wolfie is starting to become a little bit less bearish. Still bearish, we're still in a bear market, but a little bit less bearish and maybe optimistic in the next few weeks. Lots of love, hope you guys enjoyed, and I'll catch you in the next one.